Hello and welcome to my YouTube channel. In this video, I have tried to analyze the derivative data among all participants as on today's expiry, March the 2nd. Let's go forward and check what happened as of close today and where do we stand in the new expiry, which begins tomorrow, March 3rd. So the FIIs, after a little bit of relief they gave in the stock futures, index futures yesterday, have again resorted to a little bit of unwinding. It's more of unwinding and less of short covering. The one bunch of FIIs who were bullish, they have either their trail has got hit or they decided to quit, and some decided to cut their shorts, but minor quantity. This would be profit booking or whatever. So they continue to remain short. The value, overall net value going up like that. You can see the number of FIIs long is 27,000 quantity versus the number of FIIs short, which is 1,58,000. So quite the large number of FIIs are bearish on the index futures. The domestic institutions bought longs, but you can see out here, they shorted stock futures and they shorted more stock calls as the month is just in the beginning stage, right? The prop desk, more shorts added and a few props exited their long. So they're a little bit different from what the FII is doing. Normally they do a copy paste of what the FIIs do. Here we see fresh shorts being added out here in the system on them. The clients, they had one day yesterday in which they did some long unwinding. They were showing the white flag. No, we don't want to short be long anymore, but they're back again today with a good quantity of longs added. Okay. So in the options for the new expiry which starts, FII is once again back to 1 against 2.75 call put. For every one long call, they have 2.75 puts long. It's a back from 1:2 to 1 to 2.75. Now, the interesting thing out here is to watch is in the put section. You can see that only 234 contracts were squared versus 68,000 odd contracts in the calls, which suggests that these calls were the ones which got expired today. And what is most interesting is look at this part. From 5 lakhs put short, they came down to 2,40,000 put short, which means that the FIIs are into calendar spreads in the puts. So they are long in puts of the expiries which are yet to come, because there's a large quantity being carried forward, as you can see, and they are short. They were short in today's expiry, so they ate the premium out. These smart fellows, these FIIs, this week. The prop desk has gone from very mild, where in today's expiry they were quite confident that the lows will hold, which did 17,325, but they start the new expiry with a very small put short exposure. They are not put long, but they put short overall, all that very small put short. So they are ready to see some kind of dump because they are heavily call short on the new expiry starting tomorrow. So they doubled the shorts, the prop desk, while the clients decided no more call shorting. Again, let's go full on bullish, very small quantity of call short. But look at the put shorts once again at 4,20,000 or 29,000. That's a large quantity of put shorts from the clients on the start of a new expiry at 17,325 in a day when Nifty did not even once try to go above yesterday's high. So even though it did not break yesterday's low, it did not go above yesterday's high inside candle, but the clients are bullish. They feel that a higher low is forming out here or something like that. In the stock futures, again, even though the figure looks like FIIs sold a lot, no, the FIIs have unwinded longs. Okay, so this could be something which in which profit booking has happened, maybe in some of the public sector stocks which gave a decent run, or it could be some stocks where the trail stop loss is hit. Important part is that they did not add shorts. Okay, very, very nominal quantity of shorts added today. So it's more of profit booking or trail stop loss hit today from them than fresh shorts added, which is not a very bad scene to go to see right now. So maybe those stocks in which they've got exited, they still do not have a bearish view in that. The DIIs I already discussed. The prop desk bought. They bought a lot of stocks today. Quite good addition. And clients as usual, getting more and more bullish. For every 3 clients going long, 1 client is going short. So more bias towards the long from clients out there. In the options, stock options, we can see once again FII is taking a bearish, adding to the bearishness. Very nominal put at it, but yet adding to the bearishness. Similarly, with the prop desk, same to same scene being done, copy paste out there by them in bigger, line, much more quantity. While the clients, we want to get more and more bullish in this market. That's the FII, the total open interest of among all participants. From the FII prop desk point of view, it is bearish. From the client's point of view, it is bullish. For tomorrow, Friday, the first day of the new expiry, support is at 17,175, while resistance is the same as yesterday at 17,450. With that, I end this video. I hope it's helpful to you all. Please don't forget to like, share, and subscribe. And have a great weekend. Bye bye.